As I mentioned, only 9 billion rand passing through the markets. And of course, we saw markets trading pretty much flat towards the end of the trading day, all again at the mercy of the US debt ceiling and US economic data. That ISM number really disappointing the market.
Yeah, Eleni, like you said, we've come off the back of a really tough week. The Dow's had its worst week in over a year. The Dow's almost down 5% if you look at the week that's just passed. And our markets are trading basically from black swan event to black swan event at the moment. And the most recent one is the US debt ceiling debate. Last week, that's all that we were talking about. On Friday, the States came out with bad GDP numbers, which shook the markets as well. And like we expected, they seem to have come up with an 11th hour debt ceiling agreement. Both parties have agreed in principle to support the deal. That gets voted on tonight, so it's not a given that it's going through. They've said that that both parties will support it, but we'll have to see what happens tonight. And then today, we saw the ISM numbers come out at about 4 o'clock, which were pretty poor, and that seems to have shaken the markets and sent these markets pretty negative.
With regards to market returns over the past month, of course, it is the first day of August. For month to date, so we basically saw equities down 2%. Over 12 months, though, equities are up 22%. Year to date, we're down 1.5%. So a very dismal performance when you look at the equity market in South Africa. We know that at the beginning of the year, investors said that, yes, markets would flatline in the first half, but in the second half, we should see markets gaining ground and seeing a return of around 15 to 20%. Do you think that most investors out there are starting to revise these numbers and saying, well, perhaps at the end of the year we're going to see a flat performance?
Yeah, Eleni, I think the big thing is investors like certainty, and our markets are very uncertain at the moment. So forecasts like that really mean nothing when you've got the potential for the US to be defaulting, Europe to be defaulting. So I think we really need to be trading with caution around these levels here, and that's our stance.
Okay, caution. So in other words, are you staying put? Are you downloading or offloading some of your equity exposure? What is your next move?
Eleni, we like to be nibbling around these levels, so we think you've got to pick up the bargains where there are, but don't overexpose yourself at these levels, because you just don't know what's happening from one day to the next. I mean, one minute everything's fine, the next minute the US is about to default. So in these uncertain times, it's best just to stay safe. I
thought you guys had some crystal balls lying around there. Clearly, I was mistaken.
I wish.
Okay, so Kumba at the top of the top 40, up 3.5%. Exxaro gaining 3.34%. So we saw these industrial companies gaining significant ground today. Tell us about Exxaro. We know that the coal strike, of course, has been called off. Clearly, a lot of positive news that is filtering through.
Yeah, Eleni, we like Exxaro. I mean, Exxaro is one of the cheapest stocks on the JSE if you look at its PE ratio. The strike ending, that's obviously good news for the company, so it's rallying based on that. Kumba released good results last week, and it's pretty much trading on the back of that. It was hit hard last week, just in line with general market movements. And yeah, I mean, we think that Kumba's offering good value around here as well. So it's still a cheap stock, considering what's going on in the markets.
Okay, with regards to Nedbank, we saw the company reporting a 26% rise in first half profit. Again, a very different picture to what we're seeing coming through on a global level. We're seeing banks globally starting to cut back on jobs. And it seems that we have now changed our stance. We're starting to see double-digit growth. Do you think a company such as Nedbank can actually maintain these profits going forward?
Yeah, Eleni, I mean, in their report, they basically stated that they do expect to continue with their double-figure growth. We've seen their revenue increase 11%, which we're quite happy with. Their earnings, they came in pretty much in line with their trading update. We expected a little bit more out of them, but basically they seem to be strengthening their provision book ahead of the uncertainty with the change in the rate cycle. So they seem to be just being a little bit careful on that side there. And yeah, other than that, we're pretty happy with Nedbank. Nedbank is the top pick from our analysts at the moment in the banking sector, and it is their favorite stock out of the four.
Okay, so ABSA out with results tomorrow. So what is on the cards for ABSA? I mean, you said Nedbank is your top pick. What about the Red Bank?
Nedbank is our top pick. ABSA tomorrow, what we're expecting is we're expecting earnings of around 646 cents, so 6.46 Rand per share, and we're expecting a dividend of about 2.70 Rand.
With regards to the overall banking space, do you think that we're going to start seeing contagion feeding through on a global level? So if anything does play out globally, any negative news, do you think it will feed through into our banks, or can we say that we are currently disconnected?
I think to a degree we are disconnected. Obviously, the big focus is on growth and the sustainability of the recovery of the global economy. That's the big question. But in terms of direct impact on our banks, I think our exposure is pretty limited.
We saw the likes of Anglo American coming under pressure today, shedding 0.9%. Of course, Kumba, as I mentioned, up 3.5%. Anglo American seems to be quite a favourite, given the fact that we're starting to see a much healthier balance sheet. So that's what we saw in 2008, 2009. But left most investors disappointed with regards to the dividend. What is your view?
Yeah, Eleni, the results were pretty much, they came in line with general consensus estimates. They seem to have missed on their dividend side. We think maybe that they're holding a bit of cash back for future capital expenditure. They have said that they do plan to spend a lot over the next coming years. And the CEO has come out and said that they expect a better second half as well. So we're interested to see what they produce for the year going forward.
Okay, so with regards to what we're seeing in the US, let's just touch on some of the key elements for you going forward and how that could impact South Africa. What should investors be bracing themselves for? We've had very light volume today, 9 billion rand passing through the market. Do you think it's going to be the name of the game tomorrow if we don't see proper resolution? Perhaps we will see resolution, but then investors naturally just turn their attention to some of the fine prints and perhaps reading between the lines.
Yeah, exactly, Eleni. I think the market kind of assumes that this deal is going to go through. If for some reason the deal fails tonight and the votes don't go through, I think it's going to be very messy on the markets tomorrow. So even though they do push the deal through, there's still a lot in focus. Europe's going to come back. Spain and Italy are going to be the next focus. The guys are saying that the European fund that they've set up is nowhere near big enough to even help Italy or Spain out. So that'll be the next story. And then also, raising the debt ceiling, we now got to focus on, what about debt sustainability? Can the US control their costs, and can they get this under control? They can't just keep increasing their credit card limit like this. Okay,
very quickly, your view on South Africa's PMI globally. Is it a concern for investors? Do you think that they're starting to take a big notice in terms of what's happening on the macroeconomy front? You said you were nibbling at these levels. What would make you stop buying equities?
Yeah, Eleni, PMI, the guys are saying that one of the big reasons for the massive drop we've seen in our PMI is just basically because of the start of strike season. They've also commented saying that companies have been laying off people, so there are less people employed. But the PMI numbers, as you've seen, are coming down in line with global PMI numbers. So it's nothing South Africa specific. I think we're struggling with the rest of the world.